Good afternoon, everyone. Thank you so much for joining us today. It's good to have you with us. We are going to be talking a little bit more about student loan repayment and refinancing today, and we're glad to have you on. My name is Sarah Scruggs. I'm the Community Engagement Specialist at Harvard University Employees Credit Union, and I'm happy to be here with you all. Previously, I have worked in higher education as well as dallied in some financial aid offices as well. So hopefully can answer some questions for you all as we talk a little bit more about the student loans that you may be holding or student may be holding in your life. And so I'm happy to answer any questions that may come up. To get through some logistics today, first is we've gone ahead and muted everybody on the call except for myself so that hopefully you can hear me and you're able to continue doing whatever you need to do during this time period, whether that be eating lunch or dealing with anything going on in the background. Don't hesitate to continue doing those things during this presentation. We don't want you muted to mean that there are no questions. There is a questions feature on GoToWebinar. It is either on the right-hand side of your screen or at the top navigation. And so I would love if you could just please submit a question for me, whether that be a question about student loans, or you can let me know where you are joining us from today. That would be wonderful. So if you could, just in the questions feature, either ask a question that you have about student loans, or put where you are joining us from today. Number one, this way I can know you can hear me. And number two, this way I know you know where the questions feature is. So if you could just put in that questions feature where you're joining us from today, or a question that you have about student loans. This presentation is being recorded, so you will have access to this recording hopefully within about 24 to 48 hours. We're hoping to get this email out tomorrow. It will be emailed directly to you, as well as the slides from today's presentation. So if there are any slides that you find extremely interesting or have specific webinar URLs on them, that way you can go back to those and have those. And it is going to be on our YouTube channel. So all of our previously recorded webinars are on our YouTube channel. So you can have a look through those if you're interested in other topics as well. We will have a survey today, and I do ask you to just take a couple minutes to do this so that we can make sure that we are continuing to bring quality information to you all and make sure that this is a wonderful service for you all at DFCI. I'm glad you're all on today. And I want to talk a little bit before we jump into our topic of student loans today. I want to talk quickly about the credit union. Harvard University Employees Credit Union is Harvard's not-for-profit financial institution. We exclusively serve the Harvard community and all of its affiliates, including those at Dana-Farber. And what I want to make sure that I've answered today is that if you have any questions about membership at the credit union, please let me know. We extend membership to all of those in the Harvard community, again, including you all at Dana-Farber. And one thing to note is that once you're a member for life, even if your relationship with Harvard changes in some way. As well as not only are you then a member, but anyone in your family is also eligible to become a member then, including children, siblings, grandparents, parents, all of that. So this is a really great service that we have for the whole community, and we hope that we offer products and services that are helpful for you all. And again, like I said, if there are any questions that I can answer about membership at the credit union, please don't hesitate to let me know. Jumping into our topic for today, steps to student loan repayment. There are a few different steps to think of, and we're going to go through each of these in detail today. The first being understanding what types of loans you hold. Many people hold different types of loans at one time, and so we want to get all of those straight and understood. The second being repayment options. What are our options when it comes to paying back these loans, and how can we take advantage of the best option for us? Researching your federal forgiveness if you do hold federal loans, and possible discharge options. And then refinancing options. At this time, there could be a really good refinancing deal out there, so we want to make sure that you know about that and are understanding what right questions to ask about refinancing. All right. So starting off with step one, understanding what loans you already hold. This is a common question. Sometimes some of us don't even know that we hold multiple different loans. If you've ever taken out a loan as a co-signer, that could possibly be on your report. So it is important to understand your types of loans. There are really three different types of loans or categories that we can put these loans into. First would be federal loans. These are going to say anything that is direct, subsidized, or unsubsidized. A Perkins loan and a PLUS loan, parent or graduate. The federal loans can also be called a Stafford loan. You may have heard them as Stafford loan when you went to school, but now they've changed those into direct subsidized and unsubsidized. So that's what you'll hear me say throughout the presentation. You possibly could have a state student loan. Massachusetts does have state student loans available, but these vary by state. So unfortunately, I can't give you an end-all be-all for the type of loan that comes from a state because there are just so many. And then private loans. These are loans that have been offered by credit unions, banks, universities and schools, and private companies. You'll hear Sallie Mae is pretty often known as a private student loan company. Wells Fargo, Bank of America. I mean, the list goes on and on. So you could hold possibly all three of these at this time. You could possibly hold one of these at this time, but hopefully we have some good information for each of these. If you have federal student loans, I highly recommend going to the studentaid.gov page. Studentaid.gov is an extremely helpful website. They have many different fact guides as well as frequently asked questions, videos about certain things. But what they have right now is the most up-to-date announcements on any forbearance happening with the federal government. Hopefully by now you all know that if you do hold federal loans have been in forbearance, no interest being charged on them since March of 2020. And if you have been paying on your federal student loans since then, you are more than welcome to request that your money be refunded back to you, and you don't have to pay on them. If you feel like it's best for you to continue paying on them while they're at 0% interest, so you're paying directly on principal, that is a really great strategy because right now at 0% interest, it's never going to get better than that. We don't foresee the federal government forgiving any loans at this point in time based on what we've heard from the federal government, but that can always change. That is something to know about your federal student loans. It comes with the maximum benefit of knowing that the federal government is in charge of those loans. And from time to time, they float ideas out there that sound really great, like forgiving all of those loans or a certain amount, but they're not always going to happen. And so that's something to note, is that you want to stay up to date on this. And you can go directly to that URL that you see there. So to talk more about the different types of loans, we've got the subsidized and unsubsidized. These are two different types of loans. Like I said, they're formerly known as Stafford loans or direct loans. You might see those on your payment portal. When you borrow these loans, there is no credit check because they're assuming that a 17-year-old student or 18-year-old student doesn't have a huge credit history at this point. So they are loaning this to that student without the credit check. Subsidized loans are only available to undergraduates. So if you've been to multiple, gotten your undergraduate, master's, possibly a PhD or an MD, that's going to be a little bit different. You can only have subsidized loans from an undergraduate perspective. What is the difference between an unsubsidized and a subsidized loan? A subsidized loan, which is only for undergraduates, is a loan that does not earn interest while you're in school. So it is not accruing interest while you're in school. An unsubsidized loan has been accruing interest since the day you took it out. And that has not changed until March of 2020 when it is not accruing any interest during that time. But know that that subsidized loan has not accrued interest while you're in school. You can defer paying on your loans while you're enrolled in school at least half time. Maybe you've earned your bachelor's degree and you're looking to go back to your master's, but paying on your student loans would deter you from doing that. You can actually put them into deferment if you're enrolled at least half time. There is a grace period of 6 months after someone has graduated from school with federal loans. You are not required to pay back on them right after. They hope you get a job within 6 months. That's kind of the goal. And then you can begin paying back. You are allowed to start paying on your student loans whenever you would like. The federal government will take its money whenever you feel like giving it to them if it's earlier than they say you have to, right? The rates are based off of when you borrowed the loan. This can be quite confusing because you may hear of, oh, the rates now are extremely low for federal student loans, which is true. But that is for students who are taking them out right now to go to college. Unfortunately, you normally will not be able to get that rate because you've gone to college possibly earlier than this, maybe a few years ago or maybe more than a few years ago, but those rates are based off of when you borrowed the loan. There's also the Federal Plus and Graduate Plus loan. Some of you may hold your own student loans from federal government, and you may hold a plus loan for your own student or child, and that is pretty common. But the Federal Plus loan for undergraduate students, the parent is the borrower on this loan, and they do a credit check on the parent. So there are some parents who do not qualify for the plus loan, and so that is really important that you know that the plus loan is available, but the student has to complete the FAFSA, and then you would apply for the plus loan as the parent. The student really has no place in holding that loan. It is the parent's responsibility to pay it back. There is no grace period with the plus loan for parents. They expect you to begin paying on that while your student is in school. You can request a deferment, though, until the student has graduated from school. The interest rate will vary, and the lender is directly from the Department of Education. The Graduate Plus is extremely similar, except the parent is no longer taking this out. The student will be taking this loan out, and there is a grace period automatically built in of 6 months after the student graduates. With the Graduate Plus loan, many students have this if they need additional living expenses, something of that nature. So the Graduate Plus loan is pretty common for students to take out, but know that there will be a credit check on the Graduate Plus loan. Talking a little bit more about private student loans, they can be borrowed through almost any private entity that lends money. At this point, I think most banks, most credit unions have some financial assistance of private student loans. Harvard University Employees Credit Union does have a student loan product for parents, for students, for graduate students, many different types of education loans. But they can be also borrowed through Sallie Mae. You may have seen that. The terms will vary. Unfortunately, there is no standard term for private student loans. This is why we encourage you to compare the interest rates. And you'll see this when we talk about refinancing as well. It's important to compare interest rates and what would be best for your situation. Maybe the interest rate may be a little bit higher, but maybe the terms are longer. Maybe that's better for you and your situation. That's really what you have to look at. And the grace periods will differ from lender to lender, as well as repayment terms. So there may be companies that offer a 6-month grace period. There may be companies that offer a 2-month grace period. There may be companies that offer no grace period and you're expected to pay. There could be potential benefits to getting a private student loan. Co-sign or release options. Maybe you've gotten a private student loan for your student or child, and maybe you're able to be released from that loan once they have a credit score or once they've made a certain amount of payments. Some credit unions and banks will offer interest rate reduction with auto pay. If you have a private student loan and you've never asked about interest rate reduction with auto pay setup, go ahead and ask about that with your lender. At the credit union, we do reduce the rate for folks who set up auto pay from their bank account. This is because the lender then knows they're going to be paying on time every single month. They will not miss a month. So they will be getting their money, and that's why they're willing to lower that interest rate. So that is important to know and important to ask if you do have a private student loan. You have to know the details of your own loans. Everybody's situation is different. Even if we went to school at the exact same time, all the same years, exact same school, our loans will still look different. We all had different needs going through. And so going on studentaid.gov and managing your loans where you can view your account is going to be the easiest place to find these details if you hold federal student loans. You can look here for the amount, the rates, and the terms that you're on. You'll get this information now, even though you may not be paying on your student loans, you'll still receive this information. So I highly recommend going to studentaid.gov and viewing your account for managing loans. And these are federal loans only. So where can you go if you have private student loans? Going to your credit report is going to be the first step for figuring out what those things are, rates, terms, all of that good stuff. Annualcreditreport.com is the only website authorized by federal law to and is required to give you your free credit report once a year. Right now during COVID, until April of 2022, they are offering free weekly copies of your annual credit report. Something to note, do I believe that you need to go and look at your credit report weekly? No. To be honest with you, probably once every 3 months is good because it keeps you up to date with what's going on, but not much is going to be changing from this week to next week on your credit report. So highly recommend that you check in with that. Even if you just have federal loans, go ahead and check in on your credit report just to make sure that everything is right on your credit report, everything's being reported correctly, because this is an important thing. One thing I will mention, do not look up your credit report information on unsecure Wi-Fi. So what does that mean? I mainly use this because this is something that I think I've done in the past, but going to a Starbucks and using their free Wi-Fi and then accessing any type of bank accounts or credit reports, that can be extremely unsafe. And someone could possibly get that information. So it is extremely important that you do this on secure Wi-Fi networks. So we've passed step 1. We know what types of loans we hold. That's probably the first step we all need to go for, is really figuring out what are the types, what are the rates, what are the terms of all of our loans. Now we need to figure out our repayment options. So I'm sure that you've heard the federal repayment options abound. They have probably, I think, maybe 12 different types of repayment plans that they offer for folks. And that is one of the largest benefits of the federal loans. So if you hold federal loans, you probably have heard of a lot of these plans, and I'm not going to go into a ton of detail about all of them, but really these are just to show you the concepts that you don't just have to go with the traditional 10-year standard repayment. If that isn't working for you and your budget, or if maybe you want to be more aggressive in paying off your student loans, there are ways that you can do that. And I highly recommend if you go to studentaid.gov, there you can read up, pages of information about all of these plans. You can also call your servicer directly. So your servicer is where you would go to pay. So a lot of the servicers that you've heard of maybe are going to be Nelnet. You may have heard of them. Federal Student Loan Repayment. You may have heard of some of them in the news that are going to be changing in coming years. It's important to know who your servicer is so that you can call and talk to them about a plan that may be best for you. When you do change plans, things will start over. So I hope that makes sense. So once you start on a different type of plan, if you are working towards a type of forgiveness, it is possible that changing to that plan could start over your clock. So it is really, really important that you speak to your servicer about your specific situation. Because if you're trying to get public service loan forgiveness, which we'll speak about in a moment, and you switch to a different plan that's not covered under public service loan forgiveness, then you're out of luck. And that's really unfortunate, and it's happened to a lot of people. I'm sure you've heard about it. I'm sure people have talked to you about it, that you've heard stories about public service loan forgiveness, and it is unfortunate because we should be rewarding folks who work in those settings. And unfortunately, with just one wrong move, we can mess up our chances of that. So it is important that you speak with your servicer about your options and what your long-term plan is. Income-based repayment plans are based on understanding that your income will be small normally as you first get out of school, and then it will grow as you continue to earn and move on in your career. Hopefully, that's your trajectory you're taking. But it can last anywhere from 20 to 25 years that you'll be paying off those loans. So as you've probably heard in the news, many people saying, you know, I've been paying my student loans for 30, 35 years, still haven't paid them off. That could be true. And a lot of times those folks will have more than just federal, but that is something to note, is that you can lengthen the amount of time that you're paying on a plan, but it could possibly cost you a lot in interest, cost you a lot in time. You're not going to get that time back. So let's say that you're in a situation where you are not able to pay for your student loans. Whether that be you've talked through all the options of income-based repayment, you've talked through the options of gradual payment, and none of them will work for you. Contact your federal and private loan servicer if you're unable to make payments, because if you just stop making payments, that could ensue many consequences. But if you speak with them directly, a lot of times they can help point you in the right direction, what could be for you. There are federal deferment plans that allow you to pause payments under certain conditions. Like I said earlier, deferment can happen while you're enrolled in school at least half time. But there could possibly be other options for deferment as well. Speaking with your servicer will give you more details about this. But if you don't qualify for federal deferment, they could possibly put you into a forbearance. And this just allows you to temporarily postpone your payments. The key word here is postpone. They're not going to cancel any of your repayment. You will still be paying on that. A lot of times you are still earning interest during a forbearance period, which is why this forbearance period from March 2020 to now is so unique. And that is because there's no interest accruing. But when you're in forbearance, because you can't pay, a lot of times the interest will still be accruing and you'll end up paying that interest when you do continue to make payments later on. Are these options bad and something you shouldn't take advantage of? No, these options are here if you need it. If you are unable to make payments, forbearance may be the best option for you. It's much better than just not paying. I'll be completely honest with you. Much, 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 much better. So what happens if you miss a payment? And why am I harping so much on contacting your servicer and talking with them if you're not able to pay? Because it affects all of these things. It affects your ability to borrow in the future. It could affect your ability to borrow future federal loans, but that's not the only future borrowing that could affect. It can affect your future borrowing for getting a mortgage, unfortunately, buying a car, those types of things in the future that you're looking forward to. It really could affect that. It may increase the amount you need to repay. There are fees and fines when you do not pay your student loan bills. And they will rack up and they will get their money. That at the end of the day is the kind of final rule, is that they will get the money. And it negatively impacts your credit score. Just as not paying any bills negatively impacts your credit score, this will impact it as well, especially if it is the only loan that you hold on your credit report. It will affect it very negatively. There could be government intervention. If you spend long enough not paying your student loans, the government could possibly garnish your wages, to hold on to your tax refunds, your Social Security benefits, or possibly any other income that you'd be getting from the federal government. And we really don't want that. That would be, I mean, that is last resort, pretty terrible. And we definitely don't want that to happen to us. So we've learned about our repayment options and kind of what we have there. But let's say that none of those things work for us. We kind of feel like we're in a spot where we just can't continue paying at the level that we're paying right now. And maybe federal discharge options or refinancing may be best for us. So let's talk about forgiveness and discharge options first. There are quite a few here that you'll see. Oops, went too far, but here you'll see studentaid.gov, that URL. This is a great URL to have. And you can, like I said, you'll be getting these slides, so you don't have to write it down or anything. You'll have them. But all of these discharge options exist. There is teacher loan forgiveness if you maybe a spouse or a partner or a child works in a school, they could possibly have their loans forgiven. Perkins loan, discharge due to death, unfortunate but necessary. And then closed school discharge. If you went to a school that is no longer open, there could be options for you. Now we're going to talk about what probably a lot of you are wondering about. Public Service Loan Forgiveness, or PSLF. PSLF has a reputation. You've probably heard this reputation far and wide. You've probably heard people who have gotten their loans forgiven, but you've probably heard many more who have not. And that is because this program expects you to stay on top of it. They are not just going to forgive your loans willy-nilly. That is not what the federal government is going to do. They have a very strict set of guidelines to qualify and to receive public service loan forgiveness. So we're going to talk about it a little, but I want to reiterate that doing your own research on studentaid.gov, that URL, will be most helpful for you, because you'll be able to actually go through a tutorial or a help form that will tell you, number one, if your employer qualifies, which if you work at Dana-Farber, your employer does qualify, as well as tell you, you need to bring your W-2 or your tax forms so that they can see and make sure that you're on the right track with all of your forms, all of that, monthly payments. They'll tell you what time to expect that you could receive that public service loan forgiveness, and that is the PSLF help tool. That is a great tool. It doesn't do everything for you, but make sure you use it as a tool. So it forgives a remaining balance on your federal direct loans after 120 qualifying monthly payments. 120 qualifying monthly payments is 10 years. The good news here is that while we are in forbearance from March of 2020 until now, these months have counted toward the public service loan forgiveness. That is wonderful. That's wonderful. But know that it says direct loans. So if you have a plus loan, if you have a graduate plus loan, those don't count. You can't get those forgiven through this program. Forgiveness is only granted under a qualifying repayment plan. So, like I said previously, talk with your servicer before you switch to any particular repayment plan. If you're planning on getting public service loan forgiveness, it is so important that you are on top of it. No one's going to come calling after you. No one's going to come check in on you. You have to put in a lot of work to receive this public service loan forgiveness. And it's under a qualifying repayment plan only. Income-based repayment plans, some qualify, some do not. So you just have to be very careful. And you must be working full-time for a qualifying employer. Nonprofit hospitals do qualify under the employer. You have to be working full-time, whatever full-time is for your employer. There is no federal, like you have to work 40 hours a week or whatever. It's whatever full-time is for your employer. Every year you do have to fill out forms for public service loan forgiveness. Each year you need to make sure that you are working for a qualifying employer. Let's say that for 5 years you worked at DFCI and then for 5 years you moved over to Beth Israel. That would work. It doesn't have to be for one employer. They both just have to qualify. Okay. Let's say that your spouse or partner is a teacher and they work for multiple different public schools. They could qualify for this as long as they're working full-time under an employer that is qualified. There are so many details to the public service loan forgiveness that I want you to make a plan of action. If you want to take advantage of public service loan forgiveness, I encourage you sit down this evening or this weekend and write down the steps you need to take by either going online and doing the help tool or going to this website and looking at your account to know exactly what you need to do and what are your next steps to receive public service loan forgiveness. Like I said, this is a great website. This tool, you'll see here on the bottom half of the screen, it talks about the tool to learn more about PSLF. It will help you assess whether your employer qualifies, whether your loans qualify, and which form you need to submit, because there are many forms and we want to make sure we're submitting the right one. Okay, and it is important to note that this form is not completed once you finish with the tool. You actually have to print it out and get your employer to sign that. I'm sure Dana-Farber has a way to do this. Many people are probably trying to take advantage of PSLF, so this is an important thing that your employer will know how to do. So now we've talked a little bit about possible forgiveness or discharge options within federal student loans. Now we're going to talk about refinancing. Before I even get into refinancing, I think I recently was on a webinar where I was learning a little bit more about the student loan forbearance and learning more about what that means, what that looks like. And the speaker was saying, you know, if I had a federal student loan right now, I don't know if I would consider refinancing at this moment because I'm not going to get a better interest rate than 0%, which is what is on your loan right now. And it's true. Private companies cannot offer you a 0% interest rate because they have to make money somehow, whereas the federal government doesn't have to do that. There are many benefits that come with a federal student loan that private companies just can't offer. And so I highly recommend that you consider, what is it that I want to get out of refinancing and what could possibly best help me in my situation now. So if you held private student loans, this could be a really great time to consider refinancing. I'll be completely honest with you. Rates are pretty low right now because they're trying to compete with the federal government's rates of 0%. So you may find that rates are pretty low right now. So this could be a good time to refinance. So what is refinancing? It's a new loan that combines your private and or your federal loans into one new loan. So let's say that you have 3 different student loans from company A, company B, company C. But you realize that company D actually has the best rates. So you're going to take all that A through C, and company D will pay off A, B, and C. And now they hold your loan and you'll be making your payments to company D. That is refinancing. What are some benefits of refinancing? It could lower your monthly payment. That's normally why people refinance. I'm sure you've heard about everyone refinancing their mortgage recently. That is because rates are lower. And it is a great market right now for those folks who are wanting to borrow money. Not so great of a market for those wanting to save money. But if you are wanting to lower your interest rate, now is a great time to look around and do that. You can have one monthly bill and one interest rate. A lot of times there are just tons of interest rates that go along with student loans. And so having one could better help you see the path ahead. And there's normally no application fee, and make sure when you do refinance that there are no prepayment penalties. In Massachusetts, prepayment penalties normally are not the norm. Most banks and credit unions say that they will take your money whenever you'd like to give it to them, but make sure that there are no prepayment penalties because that could put you in a bind. Something to note, federal consolidation of your student loans is different than refinancing. Normally, you cannot consolidate your loans and get PSLF. So normally I don't even encourage people to look into federal consolidation if they are trying to get their PSLF. This is private refinancing. This has nothing to do with federal consolidation on this slide. Consolidation is a whole nother ball game. And that's something that you'd speak with your servicer about possibly doing. So what should you consider before you refinance? The increased rate, possibly. So let's say that maybe your first loan was based on a really good credit score and now your credit score has dipped a little bit. You may not get the rate you're wanting because almost all private student loan refinancing is going to be based on credit score. Maybe you have a really high credit score and you used to have not as great of a credit score. Maybe now is the time to consider refinancing. You're going to lose any benefits that are associated with your original loan. My manager always tells me this because this is a great example of it. It's like, let's say that you lived in this apartment and you loved that dishwasher at that apartment, but then you move out, you're paying rent to another apartment. You can't just come back and use that dishwasher just because you liked it a lot because now you're paying a different apartment rent and you're no longer paying that rent. So your benefits don't travel with you. And that's something to really think about. Are the benefits that I'm receiving now worth the higher interest rate that I'm getting possibly? The repayment term almost always begins right away once you refinance. There normally is no grace period once you refinance. That is another benefit that you're possibly losing. So what I'm hoping to see from this slide is that you really do need to consider and sit down and wonder, what is the best path forward for me? And a group of folks who can help you with that or help think through that at least and help you specifically with your federal student loans is Greenpath Financial Wellness. They are a nonprofit that Harvard University Employee Credit Union works with and pays so that you can have free credit, budget, COVID-19 counseling, as well as free federal student loan counseling. So if you're kind of like, okay, I just need to wrap my head around what types of loans I have and think about the income-based repayment options, Greenpath could be a great group to call. This is free for you and anyone in your household to use the service because you did attend today's session. You can go to that URL and look up the times that they have calls scheduled. They're available until 10 p.m., which I think is really wonderful, especially for our healthcare workers because your schedules normally don't fit within a 9 to 5 all the time. And Greenpath really can help you set up a budget to think about, okay, so how much can I budget towards my student loans? That helps you really think about, okay, now I know what my goal is for each student loan that I need to pay on. They can also look over your credit report with you. If you're a little bit confused about your credit report, they offer free accredited credit counselors to look over your credit report with you. So I highly recommend reaching out. So now we're going to talk a little bit about the strategy of your repayment. Let's say that you have holds a current loan for student loans that's in the amount of $40,000. The interest rate is 8.5%, which is pretty high right now. I'll be honest, if you have something that's above probably maybe 5%, I would say that this time is a great time to start looking. Your monthly payment is $552. Your loan term are in terms of months, 103 months left on the loan, or 8.5 years. The total interest paid over this amount of time will be $16,314. That's quite a bit of money paid in interest just for somebody holding on to that loan for you. So you decide you're going to get a refinance. You're ready to refinance. So you got new rate and new terms. This means that you still have the same amount of money, $40,000, but your interest rate dropped 3%. So your monthly payments dropped over $100. So let's say that you really need cash flow right now. This is a great opportunity because your loan terms moved back to a 10-year repayment period. So you see that you're still going to be paying that 5.5% in interest, but you're going to make it a little bit longer. You're going to pay a little bit more time. So your total interest paid is a little bit lower because that interest rate is lower, but you're taking a little longer of time. So let's say that you now decide, you know what? I can pay the exact same I was paying per month. I really don't need a lower monthly payment, but I would like to finish up paying this loan a little bit quicker. Okay, so you take the same amount, 40,000, your interest rate is still at that 5.5%, but you say, I can pay $552 every month on my loans. So your loan terms are going to get smaller. You're going to pay off this loan quicker. You're going to pay it off in 7.4 years, saving you additional money, $8,726 of total interest paid in that time period. So that's a great strategy. Now let's say, you know what, $552 is kind of a random number. Let's round it off and go with $575. We can pay $575 a month. So now we're paying it off in 7 years. And this saves you an additional $5,000, about $5,000, $500, excuse me. So you'll see here, we've cut from our current loan to the new rate and increased payment almost in half. So these are different strategies that you can use. Look at your loans, say, okay, what can I pay? And this is where that budgeting comes in handy. What can I pay on my student loans? What is comfortable for me right now? And you can look at it, run the numbers. You don't have to do this on your own. We have calculators on our website. If you go to huecu.org/calculators, I will put it in the chat right now. But this is a great way to kind of run the numbers because, to be honest with you, you never know what may be best for you and your family. We also have a student loan repayment flyer on our website that's available, and this is for free. You are able to use this if you'd like to kind of visualize a little bit more. I'm also going to put that in the chat. Not great at typing and talking at the same time, so you'll have to bear with me there. But the next thing that I wanted to make you all aware of course, is that survey that I spoke about at the beginning. I am going to put the link in the chat again, so you just have easy access to it. It'll take less than 3 minutes for you to complete. This just lets us know how we're doing and if this quality and content is what you all are needing at this point in time. So what are our next steps? Once we have kind of gotten all of this information, what do we do now? First, do your homework. Complete your student loan repayment chart. Know exactly, okay, these are my terms. This is the amount that I hold in student loans. And this is my interest rate. Those are all important things to know. Research your loan forgiveness options or possibly calculate that refinancing savings. you kind of have two different strategies if you hold federal student loans versus if you hold private student loans. But it's important that you do your homework, and maybe you hold both, and so you need to go down both paths. But I highly encourage you to look into it and do your homework. Everything in this presentation was truly just for principles for you to consider. They're for illustrative purposes. I'm not a tax service. I'm not a legal service. I'm not investment advice. If you do have questions about your wealth in general, a certified financial planner is the best thing to look for to help you with that. Certified financial planners can help you with your overall financial goals and strategies. But Greenpath Financial Wellness can really help you with the basics of budgeting, credit, all of that good stuff. I am happy to take any questions that may have come up during our time together. I appreciate you all being here. If there aren't any questions, that's fine too. I'll stay on for another minute or so looking for those questions, but I want to thank you all for being here today and taking time out of your afternoon. If there is anything I can help with in the future, please don't hesitate to reach out to our email, hbcu@harvard.edu.